Hey, what's going on, guys? So in this video, I wanted to just give you a portfolio update, what my portfolio is currently doing, and my plan heading into 2026 as I accumulate more asset, especially in a deep drawdown like this. So I'll go over my current positions, my thoughts on it, my plan to kind of handle the bear market, what my market outlook is, and why I am structured this way. Hopefully, there's also some lessons along the way that helps you out in this DeFi journey. So the market has been down pretty significantly over the last few weeks and few months. I just updated this morning and I was able to increase a little bit of my Bitcoin allocation in January, just doing my monthly DCA, nothing too crazy, about $500 a month. And as prices do dip cheaper, I'm probably looking to increase that allocation amount by a little bit as long as my crypto allocation is not too overweight, right? So I would be probably adding to more of my TradFi portfolio if there's a ton of crypto allocation already. I'm still feeling a little bit underexposed to Bitcoin at around 0.095. And if you guys go to the earlier videos, I only held a little bit of Bitcoin, right? About like 0.016 to begin with. So I'm pretty happy with that progress. Over like a year or so, I stacked about zero point zero 0.08 Bitcoin. And of course, because prices have been pretty strong for Bitcoin, I didn't really sell a ton of my assets to buy Bitcoin because I don't think the prices are too attractive at that point in time, right? So I just did a simple dollar cost average strategy. And that's one of the best strategy if we think an asset class is overheated because we never know if the asset is just going to keep going up really high. Like, for example, for gold, I did believe that the prices are close to being topped out. It did pull back a little bit. But when I was thinking about it potentially being topped out, it did move up by another like 20-30%, right? So we never know what's going to happen with these prices. I still hold a little bit of ETH and some NFTs. I decided to remove this amount because NFTs have just not been doing well. And I haven't really been focused on accumulating NFTs. It's just not really an accurate picture of my current portfolio, right? I haven't had time to be tracking the NFT amount. But if you go back to this spreadsheet here for 2025, I just kept a consistent 18 ETH value of my NFTs when I first started making these videos. And I just decided to remove this because the NFTs have just been trending down pretty aggressively. When I first started making these, it was valued at about 18 ETH. I believe currently it's around only about 3 ETH. And so quite a big aggressive drop. I should have sold some of it, but all of this is kind of like obvious in hindsight, right? So hindsight is always 2020. I still believe in the NFTs that I hold, but at the same time, we're just not seeing the NFT market really moving anywhere much. If we go to Blur and look at collections like Pudgy Penguins, Bored Ape, Pudgy, I believe, did break like 20 ETH and now it's only at like 4 something ETH. And it's just not a hot market at all, right? So it's really understandable that these collections are not doing well. Even Azuki, they used to have a ton of supporters and a ton of people still hold Azuki, but the market has just been really weak for like a lot of these more speculative assets. Even for Bitcoin, as I'm filming this, it's down almost 50% from the high already. So the market has been weak. And if you want to call it a bear market, it definitely feels like a bear market. And I think we are in the middle of the bear market, right? And the good thing is I still hold some stable coins, about $4,500 worth of USDC. And if we move down a little bit here, around $3,000 of USDT. So I still have that amount that I could choose to deploy into Bitcoin at any time. My focus would probably be Bitcoin and ETH in this next cycle if prices do keep trending up again. I'll probably limit my exposure to altcoins simply because it just takes a ton of time to look into altcoins and to manage as well. And I'm building a lot of different software in Drippy and I'm helping with clients with DeFi. And I'm still doing my normal investment management and consulting work. So it's a lot on my plate, but this cycle so far, I actually made a pretty good amount providing liquidity for assets like Pixel and ETH. But unfortunately, the prices have been pretty bad because the altcoin market has been quite bad. And then there's some like delays on the deliverables as well. And I'm not quite sure what the plan is on that. I believe the founders are still working hard on the project. I believe that there's still a future. That's why I am not selling all of my holdings. I'm still holding some Pixel, but I'm pretty happy with my allocation. Pretty big portion of my portfolio here at 18%. So I'm probably not going to increase that amount. And I am going to be trying to stack more Bitcoin. Potentially looking at Solana, I probably would add some allocation, but not too much. And then these other holdings like Hyperliquid, I'm really happy with them. It's been propping up my portfolio. Hyperliquid has been outperforming stuff like Bitcoin and Ethereum and Solana by quite a huge margin, especially in the last few weeks here. As prices have been swinging down, you can see Hype has been able to reverse and kind of sustain above these key moving averages here. So I'm just holding to those positions. And if Hyperliquid gets overheated, maybe I will convert some more to BTC, right? And I do hold some UBTC here, about 0.02532. If you don't know what it is, it's just a Bitcoin wrapper that is on the Hyper EVM. I am pairing it with Hype to provide liquidity. So I do have a little bit more exposure here on Bitcoin as well. So nothing too crazy. I'm still holding a little bit of MON and CHOG from my Monad airdrop. And I'm just providing liquidity for MON and USDC in a bearish range. So even if prices kind of trend down, I would still have some USDC exposure, and hopefully prices do reverse. Then I could be selling some of those holdings into more Bitcoin and more Ethereum or more stable coins, right? Same thing with CHOG. I am using my airdrop allocation to provide liquidity for these. And for CHOG, prices have been trending down pretty aggressively as well. So my portfolio is not doing too bad if you account for the social engineering scam that I had back in the last September, right? So this chart is from last year. Basically lost about 76 grand from a social engineering scam. It did drop my portfolio by quite a huge amount. And then if we remove the NFTs, which I put 18 ETH as the value, right? So if I add back 18 ETH, my portfolio right now would be worth about 42 ETH here compared to the lower amount in December, right? And if I did not lose anything from the social engineering scam, my portfolio is still looking at around 60 something ETH. So that's the reason why my portfolio is down pretty bad. So if you guys haven't looked into wallet security, I highly recommend that. And also look at the different tactics that people would use to try to scam you. Because a lot of times if you're being manipulated, it might not feel like it. If you, especially if that's your first time getting into those situations, right? And I would consider myself being pretty well versed with like the crypto security side of things, but I guess I let my guard down. So that's the biggest loss I've had. And in terms of fees collected, if we look at the last year's chart, you can see I did collect a pretty good amount of fees, almost $40,000 worth of fees. But again, because of the scam, my portfolio is down by quite a lot. And then another big change in my portfolio is I am adding some capital into my portfolio because I think that the prices are quite good. In January, I added about 6,000 something dollars that I have saved up on the side into an ETH and USDC pool, and also some spot Bitcoin. I was going to go for an ETH to Arrow pool, but the market wasn't looking too hot. So then I just switched to an ETH and USDC pool for a lower risk LP, right? It did go out of range to the downside. It had a bullish range of about $2,000 to like 100K, I believe, for more capital gains. But because it went out of range to the downside, I'm fully converted to ETH. I'm probably looking to pivot that into an ETH to Coinbase Bitcoin LP. And I do prefer crypto to crypto pools much more when prices are cheap because it's great for accumulating more crypto assets. And if the US dollar price of both ETH and Bitcoin recovers, then I would be able to get more capital gains and then potentially realize my profit or switch to more crypto to stable pool, right? So I'm looking to convert that and my Pixel to ETH LP. One of the LP is a one-sided LP that has been out of range for quite a while. And the other one is a full range LP. So I'm just planning to just keep my liquidity there throughout the bear market. And it is still generating about 100 something dollars per month. So even though Pixel has been down pretty bad, it's still a pretty nice income source as long as Pixel is not going to straight zero, right? So a full range LP sometimes is really good for a lower cap that you believe in and you want to buy and hold anyway. So that's kind of my plan with Pixel. I'm just going to compound it into this pool. And then hopefully when we see more bullish price action, I could be selling some of these for a nice profit, right? And the altcoin market has just been quite weak. Even stuff like Pengu and Pudgy Penguins. I was talking about Pudgy Penguins earlier on in the video. They're one of the largest crypto brands, and their NFT collection is only at 4 ETH. And if we're looking at the Pengu token, it did recover a little bit last year, but then the prices basically gave back all of its profit and is now trading near its all-time low, right? So this is why if we are providing liquidity for altcoins, I typically think that the best way moving forward is to be much more aggressive when taking profits rather than having that longer term investment mindset that we might need to have for something like Bitcoin and maybe also ETH. But ETH throughout this whole cycle so far has been kind of more like just bouncing up and down in like this $5,000 to this $1,500 zone. The prices just haven't been trending up aggressively, kind of like Bitcoin, right? So it's really hard to tell what an asset is going to do. But the way I run things and the way I run client portfolios, or if I'm helping clients, the way I like to do it is have a plan in place for all scenarios, right? If prices are down, for example, if I'm yield farming Bitcoin to USDC, prices are down, I'm fully converted to Bitcoin. What am I going to do in those scenarios, right? You could take on leverage, but that is also a bit more risky. Or you could use, let's say, Bitcoin to ETH LP and rotate your capital instead of maybe rebouncing down to chase a range. And then you're selling your Bitcoin at a cheap price, right? So that's the main recap of my portfolio. Not doing anything crazy. And if prices keep going down, I might get rid of my stablecoin allocation and go fully into crypto to crypto pools. And then also potentially bringing in fresh capital from whatever I've saved up throughout the last 2 years to dollar cost average into the market as well. But basically, currently, Hyperliquid is kind of carrying my portfolio. It's holding up my portfolio value quite well, and it is still generating about 10 to 25% APR across these pools. These pump to Hype pool, pump to BTC, Hype to USDT, and I have about 4 pools set up here, and it is generating me a pretty nice income. And my plan with that is either to compound in or to dollar cost average into Bitcoin or into ETH with the fees that I generate, right? So it's really nice to have that. And my Pendle pool did go out of range to the downside as well for Pendle to ETH. So I'm probably gonna be staking Pendle. If you guys haven't been keeping up, Pendle did recently switch from a V33 tokenomics model to a staking model. So you could simply stake your Pendle to get some rewards, and basically the protocol revenue, a portion of it would be accrued towards S Pendle, right? So you could kind of think about it like almost a dividend stock. I really like Pendle, and I'm gonna keep holding on to that until the market reverses. There is a unstaking cooldown of like 14 days. So you need to wait 2 weeks before you unstake or pay a 5% fee. So keep that in mind, but look into the details if you are holding some Pendle and maybe you're out of range to the downside like I am as well, right? So now let's kind of pivot and look at the market outlook here. And I just shared this chart with the Drippy community, and I will be launching that pretty soon. And the reason why I created that community is to kind of bring in different investors together, as well as yield farmers. And we're also developing a ton of software that will come in really handy when you guys are yield farming or you're simulating the different performance of liquidity pools, right? Of course, there are some software out there already, but we believe we could do it better. And a lot of these functions are still kind of lacking in some of these software. So that's what I've been kind of busy with. And that's why I prefer more passive strategies as well. If you guys already have a full-time job or a business to run, it doesn't really make sense to use too much of the more active strategies. You're using a ton of leverage and you're using a really high risk strategy, because then you could be losing money and then you could also be losing a ton of time as well. The really nice thing about passive LPing is that even though your portfolio might be down, at least you're not losing that much time when you're managing your portfolio, right? And as you're working your job or your business, freelancing, whatever, you're bringing in other income that you could inject back into your portfolio, right? A lot of portfolio growth is not going to be from like trading and stuff like that, especially if you're not great at trading. It's going to be from investing when the prices are low, and you could only do that if you have other sources of income, if the market has just been trending down quite aggressive. So I want to kind of go over this chart really quickly. What I did was I was measuring the peak to the peak from cycle to cycle. So from the 2013 cycle to the 2017 top, right? And then from 2017 to the 2021 top, and then 2021 also to the 2025 top. And there's a couple of things to notice here. The first is the diminishing return, right? As an asset grow, it typically would have diminished returns because it's tougher for a larger asset like Bitcoin to do like a 10x or a 20x, just because there's much more liquidity and a lot of sellers are willing to sell for a lower multiple. And then as an asset move up in price, just like different meme coins or different altcoins, the larger the market cap, usually the less volatile it's going to be, right? So we are seeing a diminished return, but the downside is also limited as well. And what I want to point out is that like if we measure the time between the peak to peak, it's actually pretty close between different cycles, right? So in the 2013 to 2017 cycle, it took about like 1484 days. And then the next cycle, it took about 1428. And this recent cycle, it took about like 1421 before we topped out and then started to break down from the top, and then potentially retesting some of these longer term moving averages, right? So it's actually playing out very similar to previous cycle. And at first, I wasn't sure that if it's going to play out that way. There's a lot of people that believe that the 4-year cycle is broken, and I did buy into that as well. I believe that, okay, maybe like these treasury companies stepping in and maybe some corporations are stepping in, they're accumulating more Bitcoin, and potentially if there's more and more people accumulating Bitcoin, especially these larger players, maybe the cycle would not top out exactly like before, right? But obviously I was wrong. And I guess the best way moving forward is to remain kind of flexible and think about like where potentially the prices would bottom out based on the previous cycle. But of course, the price pattern could change anytime. We could be reversing to upside over the next few weeks or over the next few months. But if we are measuring the drawdown between cycles, in 2013, it took about like 400 something days for Bitcoin to bottom out from the peak to the bottom, right? And then the next cycle over in 2018, it took about 357 days. And then in the last cycle in 2021 to 2022, it took about like 378 days. Maybe in this cycle, we will see something similar to if we are bottoming out around like 350 to 400 days. Maybe we're looking at somewhere between August and November for a potential bottom. So if we assume that the cycle is going to kind of play out like the previous cycle, then that's kind of my rough time frame that I am looking at. And throughout this whole period, I'm just getting as much money as I can from my active income sources and from whatever I have saved on the side and deploy it into the market, while making sure that I'm not over allocated to crypto as well. Because even though I really believe in the future of crypto, at the same time, it doesn't make sense to be fully invested in one industry for your entire investment portfolio, right? And as I'm getting closer to like 30 and then I'm aging as well, it doesn't make sense to be building up my TradFi portfolio and my retirement portfolio that might not have a really close correlation to crypto. So that's kind of my plan here. And I really like the take by OSF here. But basically, he was in the camp of the 4-year cycle as well. And I think this is a really great post. I recommend reading it. But I want to just highlight a few points here. The first one being that when you're buying, it's going to feel really bad, right? Everyone is saying it's over, and people are saying like Bitcoin is not a great store of value, right? We're seeing a ton of posts about that, even in Reddit or in other places. People are just disappointed with like how Bitcoin is performing, especially if other assets like gold or stocks have just been on a wild run in the last few months. So it's going to feel bad when it's actually the time to buy. It shouldn't feel really good when you're actually buying, right? Because if you're buying and it feels really great, it's typically because we're in the middle of a bull market right now. Prices are trending up pretty aggressively because after you buy, prices trend up, it feels great. But if you buy, prices trend lower, it's not going to feel amazing. But that's typically when the best prices are going to be, right? You're not going to get the best price on an uptrend, especially a aggressive one. And the second point I want to highlight here is that it's very rare for everyone to perform really well, like every single year, or have really, really good track records, right? Especially if you are actively investing, maybe you're picking some assets, maybe you're trading here and there. It is normal to have a bad year, especially when the market is not moving anywhere. The liquidity is fragmented. There's not a lot of winners, and it's just really hard to get a win in those market conditions, right? And of course, there are people that are faking their profit and loss as well. So that could be the reason why you might be feeling bad if you're down. It's because these people are just lying about their profit and loss. I've seen a lot of traders or like even DeFi people, yield farmers, they just post like a really nice looking chart that is going up and to the right while the market is kind of moving the opposite direction. But then they're not really actively shorting the market either. So then the capital that you see that is moving their portfolio upward is from like outside capital, right? Or the data is just fake in the first place. So got to be really careful about that. And a lot of people, again, believe that crypto is dead, right? And I think if you go back a couple of months, we did see a few news articles and the data on some of these OG whales of Bitcoin has been selling pretty aggressively. And it does seem like the Bitcoin price action is kind of controlled by a large group of whales, right? And I guess that's why the pattern is still playing out. They're just selling pretty aggressively and then waiting for prices to crash, draw down aggressively, and then they rebuy again. It's probably going to keep happening until all these assets are kind of dispersed, right? And another great point is that if you stay active in the market, you're going to have much more opportunities than people that leave the market because crypto is dead and it's all over, right? Crypto is no longer going to come back. It's just not a great asset and stuff like that. Those people are going to leave the market, and then those people that stay would gain the edge and have access to more and more opportunities, right? Throughout the 2021, 2022 bear market, one of my bigger regrets is just that I did not spend as much time as I could have in the crypto market. So if I actually spent much more time in there, then I would have leveled up my skills much more than what I currently am, right? And in 2023, 2024, and 2025, I did put much more time into learning DeFi, into learning yield farming. That's why I've been able to perform much better than previously, even though some of the market conditions or the assets that I've picked is kind of not doing what I expected, right? So I think the skill level and the access to opportunities is also a great thing here. And another great point in terms of strategy is just a simple dollar cost average and accumulate strategy, right? And I would add to that, if you know how to yield farm crypto to crypto pairs, it's actually one of the best strategies to accumulate crypto assets because as the US dollar value rises for these assets, you're not selling any of the crypto that you accumulated at a cheap US dollar price into US dollar, right? Maybe you're converting some ETH to Bitcoin or Bitcoin to ETH, but if the market is trending up and then these two assets are trending up, you're going to have much more capital gains than people that are just sticking purely with crypto to stable pool, right? And that doesn't mean that you can't have crypto to stable pool, but that price should not be the majority of your portfolio if you are looking for more capital gains. That is one thing I would add if you are yield farming like I am. And I would just be dollar cost averaging into those positions, right? And you want to have a range that is wide enough to actually stay in range for a long time if your plan is to accumulate these assets for a longer period of time. And even as a trader, OSF is saying that if you're chasing like the short-term gains all the time and quick aggressive wins, a lot of times you're just gambling, right? And if you're taking leverage, your drawdown is going to be much more aggressive. And if you need money short term, then this is probably not something that you should be engaged in, especially if your entire portfolio is crypto and you're using leverage. I think that's a very dangerous thing to do. And when I teach leverage strategy, I always tell my students and clients, hey, you should limit the leverage and you should only use a portion of your portfolio for leverage. And then when you're taking on leverage, you should always be more conservative and do so when it makes sense to do so, right? And for me personally, I'm just not going to take on any leverage. I'm going to dollar cost average into stuff like ETH to Bitcoin pools and then just hold that until the prices recover. Then maybe I would pivot that to crypto to stable pool. So I don't have to worry about the liquidation. And as long as I'm okay with the underlying assets, then it's all good, right? I'm accumulating those two assets. I'm earning some cash flow in the process, and I'm just building up my allocation. Because the tricky part with leverage is that, like, sometimes you're just not going to be prepared for the drop, right? Especially if that's the only strategy or position that you know how to do, and the market moves against you. For example, during the last bear market, if you took on leverage on Bitcoin at $24,000, prices did drop by another 36%, which is still quite aggressive, even though the prices did drop by quite a huge amount already, right? So we got to be prepared for that. If you guys want to use leverage, again, be really careful about it. I personally don't like to use long term leverage that much. And it is typically better to be using some of those leverage strategies when it's more likely that the prices are going to trend up versus you're using a lot of leverage when prices are trending down quite aggressively, right? So that's just something to consider. So just a quick recap of my own personal investment plan here. I'm going to be compounding into the pools I currently hold, as well as the newer pools that I want to dollar cost average more into, stuff like ETH to Bitcoin. I probably would set a range at about 0.07 to zero point zero 0.02 if I want to be more bullish on ETH. But if I want more cash flow and I don't mind either asset, I might be looking at zero point zero 0.05 or 2.017 if I'm trying to prioritize the fees that I earn over the next year or so. Or I could have a nested setup where a portion of my capital is in this tighter range LP and then another portion of my capital is in the wider range LP, right? I haven't had that much time to be managing my portfolio. So basically dollar cost average into that, compound into some of my pools, the Pixel and ETH pools, my hyperliquid pools, because I believe in those underlying assets. I would most likely be limiting my altcoin accumulation as well because I hold a decent amount of altcoins already. You can see UPump is at like 6.5% allocation. I hold about 8% of Pendle. I hold a bunch of ETH, Pixel, Hype. So I'm pretty exposed to the altcoin market already, and I'm going to be focused mainly on Bitcoin accumulation and ETH accumulation. But maybe if you're heavy into Bitcoin and into other TradFi assets, you could look into some alts as well if you want to take a higher risk, higher return approach. And then because I have a decent crypto allocation already, I probably would not be selling a ton of my other assets to ape into crypto. And even though the prices are cheap, I'm just gonna slowly add to my exposure and then limit my exposure to a comfortable amount, right? And I probably would be adding some of my TradFi portfolio assets as well, stuff like the ACHD ETF, which is made up of a lot of large cap value stocks, the VOO as well, which is the S&P 500 ETF, and maybe I'll add some QQQ, which has a lot of tech stocks in it, right? So that's kind of just my boring investment plan. I'm just stacking these assets over the next 10, 20 years, and hopefully these assets will continue to perform well. And if you look at a chart like the QQQ, right, you can see it's just been a incredible performance so far over the last 10, 20 years. And I do expect the tech stocks to be growing in the next 5 to 10 years just because there's a lot of value that you could generate with tech, right? And sometimes after a big bubble and the market crash, you can see it did take a long while before the QQQ broke its previous high. That's kind of my main thesis on ETH too, because maybe the run up of the last cycle was too aggressive. That's why it's not able to break through this cycle. So maybe the bubble from the last cycle was too big, right? Because we were seeing like a ton of celebrities, even people like Justin Bieber buying like bored apes with the ETH. It's much more different this cycle around. There's not nearly as much hype around ETH. And so the asset did struggle by quite a lot, right? Compared to maybe something like Solana. Even though Solana had a ton of hype going into this cycle, it still did not really break that much above its all-time high. But anyway, I think this video is getting kind of long, and I hope you find something useful here. And my client portfolio is still doing pretty good. The drawdown is less aggressive than just buying and holding ETH. The portfolio is mainly structured around ETH accumulation as well as Bitcoin accumulation. So we started with like 150K. The portfolio ran up to like 200 something K. Now it's back down to 110K. And it's still doing much better than just buying and holding ETH. So I'm happy with that. But the market has been pretty rough over the last few weeks and last few months. So hopefully you guys are doing well and not suffering too much. If you have any questions or you want to talk, just leave a comment down below. And if I can help, I'll try to answer you or make a video around that if I believe it would help a lot more people out. Thank you once again for watching. I'll catch you on the next one.